Welcome everyone to today's roundtable where we ask and hopefully answer the question, is crypto back? So to those of you who are not yet trusted followers of the EUVC podcast, I am Andres, your moderator for today. And as always, I am incredibly thrilled to be here. And I promise you the next 30 seconds monologue will be the only one from my side, but I just want to make sure that I set the context and share some notes on the format. So please do bear with me. When we decided to do this roundtable, we had two things in mind. First of all, at EUVC, we are investing into very early with our LP syndicate for angels and operators. So the topic is very much on our mind. And secondly, we just recently had some buzz around the sector again after the time where the shadows of FTX, the fear of overregulation, etc., caused many to hesitate about the prospects of crypto and blockchain. But in fact, this is at least in my perspective, the entirely wrong way to think about it. The dust has settled, the frothiness is gone, and the real builders, are heads down building meaningful things. So now is definitely a better time to invest than in 2021. But before we start, a couple of house rules and some notes on the format. Because of the crazy schedules of everyone, and Annie being in the States and issues with some scammers on our LinkedIn Lives, we decided to opt for pre-recording this session, and we're doing so in the evening of the 18th of January. But we are live in the chat, so please do feel free to ask questions there if you have any during this conversation, and then we'll answer them as well as we can there. And secondly, we will, of course, as always, put our key takeaways in an email for you all to read on eu.vc, as well as the recording of this. So do keep your eyes peeled for that. With that said, now let me just introduce our dear speakers for today. Let's start with my good friend Jan. Jan is a GP at Very Early, renowned for his expertise in token design and close collaboration with founders, just as any good VC. Felix is a partner at Greenfield, a sage in crypto economics, as many would say, governance and capital markets. And then we've got Annie Pai, partner at Dragonfly, known for his knack for identifying trends early and making bold contrarian bets. All of three of them have great experience in the crypto space, so I cannot wait to dive into this conversation. I don't think we could have assembled a better panel for a conversation about where we are today. So let's go directly into it. And Jan, I'll ask you first. Would you give me your insights into your investment strategies in the world of crypto? Because as you all know, we are going to see three quite different strategies here today.
Yeah, so Very Early Ventures, we have our strategy has two major parts. The first part is investing early stage, pre-seed and seed rounds, directly on the VC side. And there with these founders, we work closely together in our areas of expertise. So my own background is in token design, and then the other two partners have backgrounds in Web3 product and data science. So in these areas, we help support them as good as we can to make sure they're successful. And then on the other hand, we have a strategy of operating directly in the public crypto markets. And that kind of two-pronged approach is very synergistic because the public markets view informs our help and support of the companies, and then our deep engagement in the trenches then also gives us insight for the public markets. So that's a quick summary.
At Greenfield, we've been investing in protocols and decentralized networks since 2018, largely token deals. So those are usually in the beginning illiquid tokens that then become liquid much earlier than equity. But we also do some equity deals. Long-term focused investment strategy. We position ourselves as a partners for the builders, so we also heavily support them in various different forms. Our venture fund is structured legally in Germany. It's a third fund, 135 million euros, one of the largest in Europe. So we do seed and Series A and only occasionally pre-seed, actually. So not at very early stages as very early. And our investment team is in all major European crypto hubs, so Berlin, Lisbon, Paris, London. So we have our eyes and ears spread out on the ground. But yeah, as I said, like funding is not enough, or also like Jan mentioned, like we were supporting portfolio projects. We have bunch of functional experts in marketing, PR, legal, finance, a tech team running infrastructure. So to support our projects, we are running validator nodes, for example. We do data analytics, data science, that team, and also focusing on token economics, governance, business development. And in the investment team, we have 3 sub-teams that are focusing on consumer, decentralized finance, and infrastructure projects.
So I think there are 3 ways that Dragonfly really stands out. I think the first way is that everyone in the team is like originally very technical. I think a lot of my colleagues were instrumental in some of the big tech companies or like startups, namely OC, kind of when he worked with biology at like earn.com and all that stuff. And everyone's had their, like, I guess, own technical forays into different fields. In my case, it was a lot of deep tech. So I think that's like one way, and it helped us avoid a lot of the calamities of the past few years. I think the second way that we stand out is we're probably the largest global crypto firm right now. So we invest everywhere, every geography. So we have portfolio companies like spanning all the way from the US to Africa to Asia, of course. And we're not really playing in the early stage, super early stage market. So our minimum check size is a few million. So we're not really doing pre-seed stuff. And I think there is, kind of a surplus of capital probably in pre-seed. And I guess the third thing is we have been doing a lot more growth. And so when we invest in founders, I think they know at this point that we can kind of go all the way to the end. And if you remember in the last bear market, what happened is a few months after the bear market started, a lot of the TradFi firms were kind of selling their crypto positions. And I think in general, that turned a lot of people off, kind of working with people that didn't really understand the space. And I think the same will be true for every nascent field. Like you're going to see it in AI, I'm sure, where the people that didn't really understand AI will be the first to kind of sell their positions as, they go mark to market. And I think, of course, that's happening in crypto right now. So I think those are the big 3 for us.
Next natural question, because now we know how all of you think and see the world because of the funds you're investing out of. So Annie, I think it's natural to start with you for this question, where I want to ask you about where do you see us being right now in the crypto market? Because you can then start providing us the late stage perspective, and then we can go to Felix and Jan that are looking at what's on the ground in the very early stages.
Yeah, I think what's exciting for us is that growth in many ways is coming back. I think that there's a lot of room, especially in the kind of double-sided war of growth and international crypto. And when I mean international, I'm kind of referring in the Western perspective of things that are like contra, like super Western crypto, right? So we're seeing this market pick up in Asia, like all around the Asian tigers. You're seeing just tons and tons of people kind of working in crypto again, which is very exciting in this pickup. You're seeing it in both India and the Middle East and Africa, and like that's very exciting for us. And I think in large part this is due to liquidity kind of coming back to markets. I mean, 2022 probably in absolute numbers had one of the worst years of all time for TradFi folks, just because it's like the amount of M2 that was like pulled out was really absurd, and no one really could have predicted the amount of money that would leave the system. And now I think conditions are like starting to improve. We don't know how many rate cuts there will be, of course, this year, but I think in a lot of ways it doesn't matter. I mean, crypto was always part and parcel of a larger macro trend, and I think the big kind of institutions and TradFi folks are starting to realize it's not like crazy internet money. Like Bitcoin itself is a macro technology because Bitcoin is actually stranded gas emissions. And so if you believe that it's this natural process that you're turning gas into money, and Ethereum is going to turn electricity into money, then it's like anyone could trade this thing, right? It's actually a very simple mental model to trade, and it's not like it was 15 years ago, or in 2009 rather, of like, oh, just this like really crazy alchemy that we don't understand. And so I think that's like finally rippling to markets, and it's very exciting.
Can I ask you, Annie, how do you see that? Because one thing is the macro perspective and looking at it as an analyst looking in, right? But how do you see it when you're talking to LPs on the ground, as an example, or seeing it with the companies that you're working with, seeing that there's traction in the companies where there's good fundamentals? We're also seeing them having traction. How do you see that?
Yeah, I mean, so in the first part, I guess with LPs, I think so many of them were burned in the last few years that it's kind of what I was saying before. There's not a lot of top at like the very large scale of crypto anymore. I mean, it was like a lot of the big players, probably the majority of the big players in the last cycle got wiped out, right? And I think it's like finally time for new entrants in the market, because it's like basically everyone that we thought was a bit shady got hit, right? And like in the sort of main character exodus of crypto, it's like really who's left, right? I mean, there's like not that many kind of OG players remaining. And so I think that's a good, and that's what LPs have noticed too, right? I think a lot of them are like, okay, what really can happen at this point? We've kind of gone through the worst. So many of the big names in crypto have like either been hit super badly, like Binance, or have just gone like completely bankrupt, right? And they're like not in the game anymore. And so I think it's like finally time for a fresh entrance. They're also excited by the amount of money that they think is like coming back in the ecosystem, right? I mean, like if you just see Nvidia, I think that is like a good predictor for a lot of crypto in the future. It's like the amount of money that has like flown into tech again since the trough of 22 is a really good harbinger for the future, right? I mean, like everyone talks about this like AI and crypto dichotomy. And I think for us as a firm, we believe it's like the same thing, right? I mean, it's like, of course, we're not pivoting to AI, but I think a lot of the core innovations and technology, namely AI stuff, pilfers down to crypto. And I think that's good for all of us in this room right now, right? It's going to go and hit growth where people at the top get a lot more efficient. And that's not just like the Elon Twitter thing, right? That's just like, naturally the Schumpeterian creative destruction that goes on at large scale firms is really helping. And then at the bottom level, it's like, I think many VCs have to contend with the fact that like, what happens when it's 3 people that can start $1 billion company, right? Like how does venture itself transform when it's like, I can give a few people like 500 to $1 million and that turns into $1 billion. And you're seeing that in crypto all the time, right? It's like, you don't really need that much money in crypto to get started outside of salaries. And then it's like, they can just go infinite. And I think venture itself is due for a reckoning in that case. But with our companies, I think they're also excited by that, right? It's like, crypto is both deflationary and inflationary. It's inflationary in the way that there's so much money in the space chasing so few deals, but it's deflationary in the fact that like you get operational leverage given so few fixed costs, so few people can make, something like Uniswap, or like, they can make a brand new L1, right? And the L1 trade is still alive and well, where it's like you can put in a few tens of millions into an L1 and then it can go and like hit evaluation like Optimism or something like that, or like Aptos and the rest. And so I think that people are super excited by the fact that it's like technology was always about doing more with less. And I think you don't see that any more than in crypto right now.
Yeah, I think we generally have to see like the current state of crypto in the context of the last few years and like the macro headwinds we have seen with like a lot of really bad events like Russia invading Ukraine, rate hikings, and I think like you already mentioned like the kind of bad actors getting flushed out. I think like in the public eyes, like crypto had like over those periods a pretty bad rep, but like in the end, like a lot of those players were basically combining the best, actually not the best, but the worst of both worlds, of traditional finance and crypto, basically. Unregulated, centralized intermediaries. Leverage was building up, fraud was building up, and that had to implode at some point. And I think now that those are flushed out and those guys that overshadowed all the positive developments, the light can actually shine on the progress that we've made as an industry.
That's kind of a good summary of the outside in and now inside out. Yeah, just as you mentioned, there's been so much happening. I mean, from new kind of whole ecosystems differentiating, and so we don't just have one ecosystem in crypto that's working right now. We have like dozens, and then it's blockchains have started to clearly scale, right, with layer 2s, with other networks for data availability. We just can facilitate so much more, or host so many more users at lower cost than was ever possible. So these, I think, are some of the most just fundamental changes that we've seen. And yeah, I think crypto has always done these cycles, and I think it's somewhat to be expected, that after big boom like 2021, there was going to come a bear market, and now I think we've seen the most of that.
Yeah, and I guess to Jan's point, that naturally leads to the question that I'm sure Andreas has on the tip of his tongue, which is like, what's working in crypto, right? And I think in many ways, it's like a lot of the deep in stuff is actually taking off because, if you look at like the biggest companies in the world, a lot of them are both hardware and software companies, right? I mean, Apple is like, a core piece of that. I mean, Tesla is kind of playing multiple levels of beta at the same time, right? It's like you want to bet on AI, you can do that with Tesla. You want to bet on cars and kind of cheaper operational processes with the Gigafactory, you can do that. And I think, as we're seeing like all the stuff in the deep in space, I guess to people who don't know, it's like a decentralized physical infrastructure with things like Helium. We have a company called Andrino that's kind of doing that with Wi-Fi. You have like decentralized CDNs and all those things. And like these things are seeing like rapid growth. that's like stuff normal people can use, right? You don't need to be a PhD in computer science to like pick up a Helium node and get started, or like to use Render or Akash and get access to cheaper GPU stuff. That's like something that anyone with an internet connection can do, right? So I think that's like one of the biggest ways that I fight back against the naysayers of like, okay, you have Bitcoin, you have Ethereum, but then like what else, right? I mean, it's like, are we all going to be on Farcaster? Maybe. I mean, that possibly, right? But like, we don't need to wait for like Web3 social to work and like to fit all these other mental models for us to like actually see crypto on the ground. And you have stables and you have all these other kind of core innovations.
Yeah, I mean, as to those like deepen networks, you mentioned Akash, like, and decentralized compute networks. I think a bunch of people, let's say the tourists of the space, have shifted from crypto to AI, like as the new hype wave came up, and a bunch of people like discussing, is it crypto, is it AI, which trend has the biggest potential? And I think it's definitely not either or. That's like those deepen networks are a great example where basically with crypto protocols we can source computing power, which is getting a super scarce resource in the age of machine learning that is basically extremely hungry for compute, and basically leverage crypto technologies to satisfy that demand. And so I guess as the hype cycles play out, like people, I guess, are shifting from one to next, but those are the tourists. And I think the ones who stick around, they in the end will reap the results.
I wanted to highlight some of the like simpler, like more kind of pedestrian, but nevertheless very important things that have changed. Again, Ethereum already, like not just is it scaling now with layer 2s, but we've also had the merge in 2022. It seems like forever ago, but like that was actually quite a big shift of like proof of stake as a consensus mechanism, like working on the second largest network. And by the way, doing that swap while kind of the engine was running, so to say, that was a hugely impressive technical feat. And now I think Ether and Ether staking yield as a kind of internet bond, like that's a very attractive value proposition to a large set of market participants. And equally, the ETFs for Bitcoin having launched, I think that too will just make it accessible for such a large audience that previously just couldn't participate, whether certain institutionals or investment advisors and so on. And then maybe lastly, stablecoins. I think, Ani, you mentioned it briefly. Yeah, it sounds trivial. Okay, we can have dollars on the blockchain. So what? But hey, I mean, we can send around US dollars to anywhere in the world within minutes, if not seconds, and, much cheaper than any bank could service that. And that's, I think, right now, one of the most used crypto applications, ironically, are dollars on chain. And that's in many countries, this is making like a big change in people's day-to-day lives.
Definitely. I think that like stablecoin volume in 2022 already has reached Visa scale, like up nearly $10 trillion of value have been settled via stablecoins. And a lot of it in emerging markets and markets that are craving dollars and cannot access dollars usually. And if there is a more stable alternative to the dollar, I guess that would be even better. But so far, that's I guess the best they can access, and to access also some more investment options, I guess, through on-chain solutions.
But I think digging into that, I think so I came back from Africa somewhat recently. I think one of the interesting things that we're in an inflection point with stablecoins that we're finally getting away, I think, from the Tether Circle duopoly. And Tether's been just around like forever, right? And I think anyone that's been in crypto has just like seen the Tether through their debate of like, do they actually have the funds? Do they not? I think finally we're at a point in the market where it's like there's so many new entrants that are, like to Jan's point, capitalizing on this internet ETH yield that they can like pass it back to consumers, and like finally trying to get rid of this duopoly. Because like, I think the future of money itself is not just going to be like this kind of post World War II remnant of everyone's like using the dollar, right? I mean, of course, like people have stables right now that are pegged to the dollar, but like in 100 years, do people really think that's still going to be the case? I mean, maybe, right? I mean, it's possible, but like, I believe in entropy, and I think a lot of other people do too, right? I mean, like centralized control, especially with currency, is not really a thing. And so hopefully, yeah, the decentralized stables, I think, finally make a comeback. And like, it's actually it should be hopefully a lot more interesting than just like putting your money into a money market fund and just like hoping, right? Like coping, I guess.
That's true. Yeah. And I agree with your sentiment in the long run. But in the short run, just just getting these, treasury bill yields into actually passing them on, because that's Tether's business model, right? Is they pocket the money market fund yields, and then stablecoin holders just don't get anything of it. So I think, while I agree with you in the long run, I think in the short run it's nice to get these yields on chains. It's like an interesting step, I think.
Crypto is one of those things where it seems like there's very quickly politics involved, and even geopolitics. When you're talking about currencies and whether we're going to have a duopoly, or we're going to be all be using the dollar, or what are we going to be using in the future, that's not just a matter of which social media we're going to use. Could you all shed a bit more light on where crypto is in terms of, let's call it, policy and governments and so on the grander scale, and where are the different main powers moving?
I mean, we believe that Europe is actually pretty well positioned here with going forward with MiCA regulation. It's not perfect, but I think it's a step in the right direction that we have harmonized regulation across the Euro bloc, and I think that's one of the big topics. I think that's holding back especially institutions. It's regulatory uncertainty and risk that prevents them from building on specifically on public blockchains. And I think once that is being cleared up and there's more certainty around that, a lot more players will move into the industry. And I think it's a better approach than the regulation by enforcement that the US has driven. I mean, there are a bunch of I think other good examples, or kind of very pro jurisdictions. Singapore with a regulatory sandbox. Project Guardian is pretty interesting there, building basically interoperability across a bunch of different private chains for rebalancing of portfolios with real assets. Dubai is pretty forward looking, and I guess Jan, you can probably also speak towards Switzerland.
Yeah, I mean, from the Switzerland has been an early mover in terms of regulation, and that's why a lot of the foundations have set up shop in Switzerland. And but I think on the grand scheme of things, there's the EU, the US, and so on. But I think what's important for crypto as an industry is to just for parts of it to be able to choose to comply with whatever jurisdiction they want to be active in. And I think that is one of the remaining challenges, but we're seeing some progress. For example, one of our recent investments, Ethos, they provide a framework for any a DeFi app, or really any smart contract, kind of have a firewall around themselves and then choose what policies they want to follow. For example, they could decide, okay, we want to follow the OFAC regulations around money laundering and not including any assets that have gone through privacy mixers, for instance. And then just that fund sent to the smart contract will kind of get sent back, and only the funds that can don't fall under any of these blacklists, they can use the applications. And what I like about that paradigm is that it's kind of you're, instead of everybody having to KYC and register and send in your passport and so on, it flips it around and looks for, okay, who's not complying, and then those people don't get to use it. So it kind of keeps some of crypto's original ethos while also complying with regulations around the world, really.
One of the big topics politically right now is demographics, right? Demographics across the world, not just in the West, all look terrible. America at one point, I think America has had the kind of greatest effect here. Millennials were super young, and that helped America way back when. But now it's everywhere you look, demographics are terrible, right? I think countries, if I was a policy leader, I'd be looking at the twin plinths of so you have crypto, which makes moving capital super efficient, which never existed before. At the same time that I, as a policy leader, am reckoning with the fact that my country in 50 years is either extinct or looks enormously different than it does today, right? South Korea is one portion of that, but there's so many others. Japan is now considering immigration in a way that they haven't done before. So I think countries itself have to use regulatory kind of arbitrage to get the dwindling numbers of people into their country before all of this kind of hits the fan, right? And if crypto makes moving money super easy and capital now is like very cheap across the world, then it's like, what do you do, right? So I think they either have to submit to crypto super easily and be one of the few jurisdictions right now that really supports Bitcoin and the rest of the ecosystem, or they just watch as like they experience unprecedented levels of capital flight over the next few decades. Well, it's also because if they don't, you have to raise taxes, right? So it's like, what's going to happen? Like you're going to raise the tax rate, like taxes 15% a year to pay off the debt. Like that just didn't make sense in our political cycle, right? Like no one wants taxes. Interest rates have been going down for the past 50 years, right? So like the longer term trend of interest rates has been this like downward shift. You have blips here and there in like the 70s and stuff and like recently, but like that's not the long-term trend, right? So it's like either I just let people move their money and be the best jurisdiction and these countries all fight, these 195 countries all fight, or it's like toast, right?
I want to flip from this topic of policy and geopolitics and so on into other kind of main issues or main obstacles, main challenges in crypto. What are we looking at? What are the things that you're saying this is on the list for us to get nailed to really get crypto to get to the next level?
Years ago, we kind of had this thesis that blockchains are, to Andreas's previous point, kind of like cities, and cities itself, their ones are kind of best out as cities in the hub and spoke model of like you might be on this chain, but then you can kind of move liquidity and human capital kind of around the ecosystem. And the four things that you need to kind of make that happen, I think, are privacy, security, usability, and scalability. And I think scalability is finally solved. I think, the usage of L2s, like to Jan's point, has been growing nonstop, but then also on other chains, right? I mean, I think that's been great. Privacy, I think you might see with ZK somewhat soon, but I mean, people have been saying that for the past few years, but I think it's like kind of getting there. As it pertains to the rest, usability, I think is like getting better with 6651 and like account abstraction. I think hopefully that helps. But I think really it's just like you have to make a killer product. And I think that killer product is like probably Staples, right? Like I think Staples itself is going to be the thing that brings people from like the abject gutters into the forefront. And so hopefully with all these things, like scalability and stablecoins, I think is like a very dangerous way to weaponize crypto against like all these people that don't believe in it.
Yeah, and then I think just to unpack some of the things, other things you mentioned, privacy on one hand, right, is still, I think we now have the technology. So like zero knowledge proofs and all these new cryptographic primitives that have been developed over the past years, like they should give us the tools to finally, solve some of that, for regular users. Because right now it is still the case, to make that clear, that if I now send Andreas some Bitcoin or even USDC, like Andreas can now look at all my financial transactions that I've done, like basically on chain, what I've invested in, what I've used. So that is not necessarily what will work for end users, or especially if we want like corporations to pay and use blockchains for payments. So I think like solving privacy is one of the remaining challenges, and then also one of the opportunities in turn. And similarly with the things you mentioned, Ani, around account abstraction and so on, just getting away from this hurdle of needing to secure your seed phrase and private key. I think that is just so difficult for most users as an entry barrier. It might seem like, okay, we're all used to it by now, but for most people that is really weird, and it's like being able to like use, I don't know, like Google or Apple to log in while still having custody of their own assets. I think that is a big unlock. I think that will help bring in the next wave of users.
Yeah, I agree with those points. Actually, for privacy specifically, I think individual users, unfortunately, most don't care so much, but businesses definitely care. You don't want to reveal all your business processes to your competitors. And I think to that point, like, still, I think like regulatory clarity, as I pointed out previously, that's super important, while upholding and having compliance solutions. And I mean, there are a bunch of interesting players out there. We're also invested into one keyring that specifically focuses on basically enforcing KYC AML compliance while still upholding the maximum privacy guarantees, basically with zero knowledge credentials. And I think, yeah, that would be a major unlock. And then to account abstraction, I think one, or let's say to paint the vision or the end game, also including kind of, I would say, the next step for account abstraction in intents, where I think users should not just have to basically choose the chains they want to interact with by hand. We need frictionless UX. Basically, you want to get a certain asset. Potentially, you say, I want asset X. I'm willing to pay price Y. And a competitive market of bots or solvers is basically getting you the best deals, kind of like a search engine with concierge service that gets you what you want. But with the trust guarantees of the blockchain by signed cryptographic messages that enforce that those bots execute orders according to the criteria that you set. But I think it's still a challenge to do that cross chain. So a bunch of team were trying to tackle the challenge, but I think that's one of the interesting parts.
Yeah, I guess one of the other sectors I'd add here that I think has also been quite overlooked is like kind of more on the attribution marketing space, I guess, in general. That typically has had a very bad ring in crypto, but I mean, it's kind of become apparent that everyone needs this because you're kind of seeing many of these projects go down this airdrop path. And what I mean is like they raise a lot of money and they're kind of giving all of these kind of VC funds back to just people, many of whom don't actually use the protocol, in the realm of like thousands or tens of thousands of dollars, right? And like this money has to come from somewhere, but there's no tracking behind this. And I think, that still remains one of the core problems of the space, which is just like, why is it that like you need all of this money to get started? And many of these things are like, subsidy grants from like big chains. And so all of these funds are coming from venture capitalists who then give it to the project, and the project is like giving it back into the hands of normal users, almost like, UBI, but there has to be a way to track all of this. And I think like currently there's not really many ways to do that. And I think that still remains to be one of the big challenges of like, where does the money in crypto go, right? Like who's using the stuff? Like, why are we rewarding people that are just kind of using this to like dump on later people, right?
Totally agree that people have dropped too much of their token supply to users that really, didn't end up using it for the long run or just didn't kind of deserve it in a way. But I do think, well, two thoughts. On one hand, it's just a very cool mechanism we have in crypto that users become owners. I think that still is one of the most fundamental drivers of growth and engagement. And then on the other hand, it's also a sign that, we're out of the bear market once the airdrops start coming back. And I think they finally have. So just wanted to add these two thoughts.
Yeah, I mean, for that point, I think it's super important to have like good mechanisms for Sybil resistance, basically meaning that you make sure that one user is one user or one address is one user, and that you cannot just spin up hundreds of accounts and get all the airdrops and all those airdrops farmers like exploiting those mechanisms. I think we still need to make progress on that in decentralized ways. There are a bunch of, I guess, good attempts. But I think maybe a combination also of those like aggregators in terms of identity aggregators where you get several possibilities of maybe improving the score that you have in terms of how likely is it that you are actually a unique human that then can get airdrops, or like you also mentioned, it's a form of UBI. So ultimately UBI. And I guess like there are projects that are heavily criticized for scanning eyeballs. And then again, that's like with WorldCoin, and again, you're not really sure if people are not just selling their identity for $100. But I think we need better solutions there. But we're getting there also. And then for governance, then I guess a lot of those tokens should be ultimately used for governance actually, or that's like oftentimes the intended use. I think squaring, like the financial alignment in terms of how many tokens you hold, basically making a one person, one voting system. I think that is very powerful, so that you can make sure that like this user ownership, where I guess this user ownership really is implemented into the governance model, where I guess the whole idea is that it's users that can decide upon the platforms that they're using and they ultimately maybe depend upon. Because I think one question I'm asking myself always, like, just because you issue tokens to people, who says that it will keep them? what if like all those like users are just selling them, and like whales accumulating, funds accumulating, and then ultimately again having the major stakes of control in those protocols that in the end like our digital lives depend upon. So I think having a combination of those, like one person, one vote, and I think it does make sense to have like those who have more skin in the game give a higher say. But I think that's another aspect there.
Can I challenge you all? Because we have definitely two types of audiences for this. We have, on the one hand, those that get everything you say and would love to be part of this conversation because they have some input for it. But then we have some, on the other hand, that stumbled into this roundtable conversation, not knowing much about crypto, and to whom a lot of what you said here has been very hard to follow. So if I were to ask you to explain to your grandmother, what are the challenges for crypto and what are the main opportunities that we're coming into, and why is it that this is relevant for your grandmother?
Yeah, well, I would kind of start off and say, so if, and I, we do this a lot, I guess, just because of how many places we're investing in. But what I would say is like, so Real Vision does a really great intro to crypto series. Real Vision is like a kind of financial news website, but they have like, I think Raul Paul is like really great at explaining the originations of crypto. So that's one. Then I would tell them to look at the Crypto Canon by A16Z, which is like a collection and summary of like all these links. And then finally, I would tell them to read this book, actually probably two books that have nothing to do with crypto. The first is Where Wizards Stay Up Late, which is about the early kind of innings of the internet. And then When We Cease to Understand the World, which is about how, great scientific discoveries are made. And I think if they do all of that, they're in a good spot. The issue that people have when they're like, I want to learn about crypto, is that they actually go into crypto, which is like crypto, like people reading about crypto without actually understanding it, right? It's kind of like how when people are like, oh, I want to learn, quantum mechanics, they go like straight into physics, which is like not even a good way to tackle it, right? I mean, there's like a component of that, but like that is like not really what they mean, nor is like how they should go about it, right?
That was the answer to the grandmother, who's very ambitious and also at least smarter than I think my grandmother is. So what if this was an average grandmother that did, was thinking, okay, I'm going to ask this question, but I want a 60, 90 second reply, and then I kind of want to understand, like, why is crypto relevant to me? In that situation, what would you say, Felix?
Yeah, I mean, exactly. Yeah, I was like thinking, for those who just want to take a quick takeaway here, like at least the way how I think about it, like over time, we just more and more depend on digital platforms, online platforms, and those oftentimes like have like very strong network effect. So basically, they tend to be very large companies, monopolies that control a lot of power. They get a lot of data, and I think it's ultimately super important that we build those services in the most resilient way possible, so that we, and I guess the children, grandchildren, we can really rely on them. And by basically not putting all our eggs in one basket, but spreading all the eggs out, building a decentralized networks of many, many nodes across many jurisdictions, we can build a very resilient, I guess, suite of online services that are much more resilient and also resistant to those monopolistic powers that usually tend to charge horrendous prices to the detriment of consumers, which is why many countries have antitrust laws to prevent that monopolization. So for me, that's basically a free market solution to that problem of national monopolies emerging. I guess if the grandmother is reading newspapers about markets, maybe that perspective is interesting.
Google. Yeah.
To my actual grandma. So I did actually have to, or I tried several times to explain it to my actual grandma. So I have some practice at this. So I would maybe say something like, all right, so grandma, this internet thing, like how I'm always on my computer, and like that's actually what my work now is, just like being on my computer. Well, something similar is happening to money itself, so like just like the Swiss francs that like you have in your purse, like that is actually becoming digital now, and it's becoming digital and global at the same time. And so that allows us to do really cool stuff with it, just like you don't understand what I'm doing on my laptop in calls or typing on my computer. There's also like a lot of complicated stuff going on there. But the bottom line is that, like you could see how the bank doesn't really give you that much on your savings account, and your retirement savings have been, like not as what they promised you. Well, now there's a whole bunch of new opportunities that I can show you on how to like invest globally in many different ways. And also, if you want to send money to that Nigerian prince that you met on Facebook, like you can now do it in like a minute.
I think I misheard the original question because I was imagining it must have been a genius growing up. But like, let me explain this, I guess, from the from the point of view.
You need to get
somebody,
it from somewhere, Annie. So
yeah, exactly. But like, this would be from the POV of somebody who just like doesn't really care. So I think what I would say is like, why are things just more expensive, right? Like, when did that start happening? And the answer is like in the 70s, they got off actual currency, which is like backed by something, and they started just printing like a crap ton of money, right? For no apparent reason. And all that means is that rich people can buy scarce assets to protect their purchasing power, and poor people have to work crazy, dangerous jobs to afford even a house. And so like, in my grandmother's time, you could buy a house off a single salary, right? And now it's like you need 4 salaries to even like afford the rent in a crazy metropolitan place like London, right? Where it's like London's median rent is equivalent to the highest 2-bedroom rent, like for a single studio in London is like the 2-bedroom rent of like a city outside London, right? Which is just crazy and can't sustain. And this like internet money ends up being a lot more scarce, much like how, back in the day, it was like backed by actual stuff, right? No matter where you were in the world, it was always backed by actual stuff. And we're finally getting to the point again where like normal people can like work a job, put it in something that saves its value, and they can like buy a house. Like one of my favorite sayings is like, in the West, well, in the world now, you have to earn your money twice. The first when you work, and the second when you beat inflation. And like this is the preventative kind of medicine for that.
I want to ask you, just before we close this, where are we right now? Are we entering the next bull market, or are we not there yet? Is there more to come? Definitely normal VC market, more to come. but in the crypto market, where are we?
I think maybe to kind of connect to the thoughts that Annie just was saying about like in inflation, I think there's like a bunch of events, but also like the major big trend. Like we see all of nation states having huge piles of debt, and they all have a huge incentive to inflate that away with loose monetary policy. And as obviously they'll also look at consumer price inflation, but yes, ultimately they're gonna continue printing, and that will, I think, benefit risk assets and digital gold and like Bitcoin and other types of tokens that trade more like tech stocks. We have the Bitcoin halving coming up in April, which historically led to pretty significant price increases. And I think like now we saw the Bitcoin ETF that was spot ETF that was approved. The ETH ETF is on the horizon. I think it will come this year, probably even. Next step now, traditional finance is getting super excited about even the next steps in that industry, like Larry Fink saying that basically all types of assets will be tokenized. The ones who, I guess, recognized it early will be on the winning side. And I think now it's a race to really get involved for all those large institutions, probably over the course of this year. And I think that's pretty bullish. But yeah, remains to be seen also.
So in other words, to answer the question that I just asked, are we entering the next bull market? Is that happening right now? You would definitely say in crypto, absolutely.
I always hate to look at these things in such black and white because like, everyone had their views on crypto and then like COVID happened, right? And I think no one can predict stuff like that. And we live in a very chaotic, uncertain world. So it's tough to say. But I would say just by what you need to figure out if there's a bull market is liquidity coming back? Meaning, are they putting more money back in the system than they're taking out, right? And when we bottom in October, that's kind of the trough right before the point where they like started putting their foot down on the gas, and they accelerated the amount of money that was coming into the system, right? That's why like things started to go up. And that's how every asset class has been going up since the 70s, right? It's not because like we're getting more productive as a species, right? That's like certainly not the case. We're not like becoming more efficient at things. It's like, did they print more money, right? And so for the people here that I guess are just curious about like, is it a bull market or not? You don't need to like trust any of us. All you can do is just go to the Federal Reserve website and then check, is M2 up, right? That's like the only number that matters. So if you're actually interested in that question, yeah, just like look at, is there more money in the system or is there less? And that'll tell you.
I would also answer like somewhere in between, I guess, like that. Yes, I do think we're at least out of the bear market. Whether we hit the proper bull market, I'd say I'm confident that it'll happen sometime in the next 2 years. But yeah, like expecting like a very precise prediction, I think would be unrealistic, and yeah, wouldn't be very smart from our part. And then what makes me very optimistic are just the catalysts that we've mentioned throughout this roundtable, right? So like the institutional inflows coming in because of the ETFs. We have that trend of traditional finance moving onto the blockchain, the activity in layer 2s of just much more scalable and cheaper applications. So all of these things just make me very optimistic that there is actual substance that would merit also a proportional increase in price. I mean, if we compare 2021 and now, like we're just so much further along across basically all dimensions. So that makes me optimistic.
I should add, I'm cautiously optimistic. I also don't like to have like definitive predictions here. I do also want to say though, I think ultimately, I think we do have a lot of, let's say, productivity growth overall through technology, and I think that's the long-term trend I like to bet on as well. And I think that's also over the very long run a significant growth driver.
Amazing. On that note, everyone, thank you so much for tuning in. I think cautious optimism, but definitely also a good trending line for crypto in general. Some very strong fundamentals, at least. I can't help but think maybe I should be leaning more in. But now let's start with our very early investment with Jan and the team, and then hopefully we could get smarter over the next couple of years and pound more money into this industry. Gentlemen, thank you so much for joining us. This was a blast. We made it through quite a hectic technical show here, but we made it, and hopefully our audience didn't pick too much up on it because we did a good job editing. So everyone listening in, thank you so much for joining us today. It is awesome to have you with us. We hope that you enjoyed it. Do head on over to eu.vc to subscribe and stay in the loop about everything that's happening in the European venture industry, as well as sometimes special deep dives on the crypto scene.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
United and determined, we can serve as a model for other regions of the world.
The nature of a problem requires a European response.
Europe is a story of new beginnings, new beginnings.
Let's start acting.